Welcome to StablePod, the podcast that explores the exciting world of decentralized systems and beyond. Join us as we delve into the limitless possibilities of decentralized governance, decentralized finance, and decentralized organizations with the most creative and innovative minds in the space. We'll hear from trailblazers who are building, shaping, and maintaining the future of these decentralized systems. From DAOs to NFTs, DeFi to Web3, we cover it all on StablePod. Alrighty, everyone. Welcome back to another episode of StablePod. I'm your host, Juan Esquivel. I'm joined, as always, by my wonderful co-host, Gustav Arentoft. How are you feeling today, Gustav?
Very good. Busy weeks here in Lisbon, but feeling good.
Today's guest is helping pioneer DeFi risk management and how to service DAOs more generally. Our guest is Matt Dobel, Head of Business Development at Gauntlet. Welcome to the podcast, Matt.
Yeah, thanks for having me, guys. Happy to be here.
Awesome. Maybe we could start things off by outlining the core of what Gauntlet is aiming to achieve. And also, I'd love to hear the story of, how you joined the team and what were your personal motivations.
Gauntlets Mission is to drive adoption and understanding in the financial systems of the future. That's a pretty broad statement and mission. So in terms of how we go about doing that, we are essentially a quantitative-based economic research and optimization firm. Started around 5, I think we're about to celebrate our 5th year anniversary actually at the end of the month. And really have been, started deep in the weeds on research before we ever produced a product. Really researching things like consensus mechanisms, liquidity scenarios, how liquidators function, what their behaviors are, and then really jumped into kind of the risk management side of things. So a lot of our founding team, a lot of the founding team members come from high frequency trading or other kind of quant trading. And therefore, we took a lot of the algorithms that we were using in those prior industries and adapted them for DeFi, all with the kind of focus on making DeFi safer. And so what that looks like is essentially we've built an off-chain simulation SDK. We are ingesting protocol, ecosystem, liquidity data, on and off-chain data into those models, running thousands of simulations a day, and the outputs of which on an ongoing basis are parameters for markets like Aave or Compound or even perpetuals like Perennial, parameters that find the optimal balance between risk management, so avoiding insolvencies, but also capital efficiency, because we want to make sure that these parameters are set in a way that encourage growth, encourage borrowing, driving revenue back to the DAO and kind of value overall. So we started with risk management. We've since expanded the business a little bit. So last year, I think around midway last year, we announced our applied research team. That team is really focused on a lot of the other economic problems or economic opportunities we see in DeFi that are maybe less on the risk management side. And so that team spends a lot of time thinking about things like fee optimization, incentive optimization, a little bit of mechanism design. And then the third area of our business is Aera. Aera is a protocol that Gauntlet incubated. We are now a service provider to Aera. Aera is a separate company with its own foundation. But essentially, Aera is autonomous, non-custodial treasury management for DAOs. And so the common theme among all of these is we're trying to make DeFi better, trying to make DeFi more efficient and ultimately safer to help kind of holistically grow the industry.
Yeah, and can you speak a little bit to you joining the team? I know you've been there now, I think 2 years, correct me if I'm wrong. So you've been around for quite a bit. Why don't you speak a little bit to your time, when you first joined and how you've kind of seen things evolve over time?
I got started in crypto back in 2016, just, kind of as a hobbyist, as a lot of people did, just saw something new and wanted to mess around with it a little bit. At the time was working in fintech and, at the time was like, this is cool, but, maybe a little bit kind of like a casino. I'm not quite seeing the applicable use cases just yet. So I faded it a little bit and I held on. I still hold some of those tokens from way back then, which is kind of embarrassing because they're not worth anything now. But over time, kept an eye on the industry, kept an eye on things. And, 2020, I think reignited a lot of people's interest and also got a lot of new people interested as well. And so, for me, it was really Compound's white paper, reading through that and really having that light bulb moment of, okay, I now see where these things start to connect. I now see some applicable use cases. So I started using Compound. And I don't know if anybody remembers the earlier days of Compound. There were, it was quite a generous incentive distribution. They were bootstrapping a market. They were trying to grow it. They were kind of one of the first ones to really do this. And so, as a market participant, I was earning incentives. And then one day I noticed there was a proposal that was cutting the incentive spend by some percentage. And if I remember right, as I read through that proposal, either Gauntlet had put up the proposal or Gauntlet was mentioned in the proposal from doing some analysis. So me as a user sitting here like, oh, this is cutting my incentive spend. Who is this company? So I went and looked up Gauntlett. And I was just frankly blown away by what they were doing. It really looked like, reading through some of the research, they were getting super in depth on a lot of these mechanisms that I hadn't seen anybody else get this in depth on, really doing a lot of the hard math behind these things and coming up with logical and kind of reasonable solutions to different situations and problems that DAOs may be facing. And so while, on a personal side, it didn't benefit me to cut that, on the logical or pragmatic side, I was like, this makes a whole lot of sense. And so that really got Gauntlet on my radar. Fast forward maybe about a year later or so, I was at Square at the time, enjoyed working at Square, great company. But I was ready to make a move full-time into crypto. I mean, it's one of those things where once you decide you want to do it, it's like all you can think about. And so I remember Gauntlet again, reached out, had a bunch of really good conversations with the team, was just blown away at the caliber of people, but also like equally as egoists as well. So that really struck me, because I've been in companies with really smart people, but then like egos can be really high as well. But everybody at Gauntlet was super humble about what they were doing, really like shared and bought into the mission. And so after a bunch of conversations, I was basically begging them to let me join the company. And so I was very fortunate and happy that they did. And, at the time, Gauntlet was pretty small. We were, I think, 23, 24 employees. We're up to around 60-ish today. And so in terms of seeing how things have changed over time, I mean, there's externally and internally. So, internally, I've just seen us really beef up a lot of our data science and engineering resources, really has allowed us to productize a lot of what we do, streamline a lot. And then externally, I mean, we've seen the market change so much. I mean, back when I joined Gauntlet, there were a lot of companies, I won't go into names, that were still operating that are no longer operating today. And I think we know some of the big ones that have occurred in the last 12 to 18 months. I really think that shifted the landscape and how people think about things like risk management, how people think about things like counterparty risk. I think it's added a level of scrutiny to the market that I actually think is welcome and needed. I think people should be, inspecting what they expect, so to speak. We're here to help them inspect those. We're here to line expectations up with us as users. We want safety, and so we want to provide that to everybody else as well. And so Gauntlets mission really resonated with me. And if you look kind of in my past career, the fintech, when I was joining different companies, it was all about democratizing access to certain levels of people who may not have like traditional levels of access, maybe to banking, maybe to certain types of lending, maybe to like consumer protection. And so this felt like a nice next step in that direction.
You kind of touched on this already, but what do you contribute Gauntlets' continued success? So they've been around for quite a while. And you've seen, new products launch, like you just mentioned, you're productizing a lot of these different verticals. What would you pinpoint as like the one thing, or maybe it's just like this ability to remain nimble in this fast moving environment that has allowed Gauntlet to be a pretty clear, leader in the space, at least as it concerns, risk management and DAO service providers? Yeah,
I think there's a bunch of things that contribute to that. But if I were to boil it down and try to simplify it, I would say intense passion and intellectual curiosity. A lot of the things that we now do for DAOs came from research that we did initially. And so, we kind of have this constant feedback loop where we see interesting innovations in the market or kind of like new things popping up. We go conduct research on those things. We understand kind of like how broad this might be. We understand different implications. And at the same time, we understand, where they could be vulnerable to things like market risk or economic risk. And then we want to address those. And so, that's a constant thing that we're doing. That's a feedback loop that goes right into our models, right into like everything we're building internally. And we love doing it. That's the thing, is like if you go through a bear market, I'm sure we saw a lot of people leave the industry in the bear market. A lot of people were disillusioned. A lot of people were, maybe not so happy as they were when things were kind of up only. That wasn't the case for us. The case for us was, these are different liquidity environments. Volatility is very real right now. We need to make sure that we are doing everything we can to protect the DAOs that we serve, and also look for new kind of innovative ways to continue doing this for other verticals, for ecosystems, different market participants, for new entrants. And so for us, it's really just an intense passion to help this industry grow. Dating back to Tarun starting to research the space, I think in like 2011. So we've really had people in and around the space for quite some time, and a lot of people. Everybody at Gauntlet has really kind of bought into what we're doing here. So that means kind of regardless of what's going on in the market, we're all kind of together, and internal collaboration is something that we value really highly. There's not, one voice in a room. We want to hear from everybody. Everybody has a good perspective. And I think that, having an open culture internally as well has allowed us to thrive.
Yeah. I think that's really good. And I think, this is something which I think ties at least like the very strong teams together, is kind of like this like shared vision on the mission. So, I used to do BD. So I'm just quite curious, like you sit as, head of partnerships, right, at Gauntlet. Most of your partners and clients are DAOs. How is it working in this role where, your other side of the table is not, convincing the executive of a company, but, convincing a community? Maybe you can talk a little bit to this.
Yeah, I mean, this was the biggest change for me coming from kind of traditional Web 2 or FinTech to DeFi, DAOs, and crypto, which is, traditionally speaking, when I was at Square, we were selling kind of like enterprise suites of services and similar and other type of roles. You're typically dealing with one or two decision makers. Those one or two decision makers are typically highly qualified to make a decision on like purchasing your product or using your service or not. Really reduces a lot of friction. When somebody decides to make a purchase, they make a purchase. If somebody decides not to, they decide not to. In the case of DAOs, it changes quite a bit, right? You have a lot of token holders, you have a lot of different voices, a lot of different levels of experience with evaluating certain types of proposals. And so, it's quite different in that regard. And I think it can sometimes create more friction than maybe is needed. It can sometimes, you're kind of hearing from people who, may not even hold a token in some cases on some of these forums, but overall, I think, I do like some of the transparency. I like that we can be out in the open. I think for us, again, going back to our mission of adoption and understanding, we like being able to educate in public. I think for what we do is a little bit complex. And so being able to help educate those around us who are, wondering why we're putting up a proposal in their forum, brings me to like a rising tide lifts all boats type of scenario. So I would say quite different, but I think each of them has their pros and cons.
As one of the oldest and leading DAO service providers, have you guys felt this, this need to lead by example? Because there's definitely a lot more eyes on you. Does that influence your approach at all in some of these DAOs that you're participating in?
I don't think we necessarily have a targeted thought to lead by example. I think we organically end up leading by example. I think given that we've been in the space for a long time, I think given our experience in different DAOs and verticals and different kind of aspects of DeFi, we are often the ones internally being proactive and saying, hey, this is something we should be doing, even if nobody else is doing it. Even if it means, we're the nail that sticks out that gets hammered. For us, it's not about kind of like the publicity or not. It's, if we see a need or if we see an opportunity to make things better or safer or more efficient, oftentimes we are going to move in that direction and see if we can do that. And I think that often means going back to, kind of the organic nature of it is leading by example, because what we've seen is when we identify an opportunity and we start going after it and we, are productizing it or working on it, we do see others start to join in as well. And I think that's one kind of validates, somewhat of a product market fit, which is not the worst thing in the world, but also we're paving the way for others. And, even if that means competition, for instance, like, I don't necessarily see that as such a bad thing. I think, if competitors are even following us down some of these paths, that means we must be onto something. And if the outputs of some of these result in more efficient, safer systems, that's a lot of the validation that we need.
Oh yeah. So yeah. I mean, now you talked a little bit also about how you guys are interacting with DAOs right now. I think right now we have kind of seen most of the major protocols, DeFi protocols, having quite a similar governance structure, right? Where, there's kind of, you come up with a budget proposal, define the scope, and it basically just goes through kind of first a green lighting vote and then, the on-chain vote afterwards. Is there some things in this process that you personally has identified that you could see be improving or changing, or how do you think that because I think we can all agree that service providers are needed for DAOs, right? They're simply incapable of doing a lot of these things in-house. So like how do you think that like the governance process potentially could be changed to allow for better collaboration with service providers and also between service providers? Now, you call it competitors, and we sit in a similar situation, right, where we kind of like all need each other, because if there's only one of us, then it also defies the purpose of decentralization a bit.
Yeah, I think with regard to governance first, there's two aspects of it, or I kind of break it down in two ways. I mean, there's one, which is what you're referring to, which is kind of onboarding service providers. And I think the second piece is how service providers interact with governance from there kind of onwards. And so from the first piece, like onboarding service providers, I think people have taken a bunch of different approaches. I think generally speaking, we're seeing a lot of what I saw in kind of traditional Web 2 in a certain sense, which is like, let's throw out an RFP, let's see what we get back, and let's make a decision. I think for those that have, I think it's a good fit for some, maybe not a good fit for others. I think it just depends on the DAO makeup, the kind of stage of the DAO and the protocol, and really what their needs are, and if they kind of know and identify what their needs are very specifically. The second part of that is, let's say you are a service provider that does get onboarded to a DAO. Governance can be difficult in some cases. So like in the case of Gauntlet, like if we're pushing parameter changes to a protocol, we might see something where we want to execute a quicker change, and maybe there's a time lock, or maybe there's an execution period. And I think there's a lot of different DAOs that have this within their governance. For us, in some cases, that's okay. Like, it just depends on the situation. There are others where we'd like to make quicker changes, obviously. And a good example of that might be, so we recently onboarded Perennial, which is Perpetual's platform on Arbitrum. Instead of kind of going through governance for every change we want to make, given that perpetuals move pretty quickly, what we're actually doing is we have an address that's whitelisted to make parameter changes within certain bounds. Those can be kind of vetoed or slashed, et cetera. But in general, just allows us to let our models do a lot of what we designed them to do, which is automatically identify when parameter updates need to be made, and then directly make those parameter updates ourselves. And so I think in some cases that's a good fit for certain types of protocols. For others, it may not be. And so I think, as we continue to progress, as more service providers get involved, as DAOs continue to evolve, I think we'll see some improvements in governance mechanisms. And maybe that means breaking them down, making them a little bit more modular to account for different types of service providers and what they may or may not need to do in order to drive the value they intend to the DAO.
I want to touch on this a little bit further on, but Matt, I'm curious, how does Gauntlet decide which protocols and ecosystems to contribute to? We noted that it takes the DAO maturing to a certain point to even begin to identify these areas of where we can contribute to. This is something that us as a team at Stable Lab, we also consider in terms of when do we think it's appropriate, when is the right stage to contribute. Sometimes it's before things have been defined. Sometimes it's good to get in there get in there early, and sometimes it's better to kind of wait for certain things to progress until we start to see the right signals that now is the right time to jump in. Does Gauntlett have a framework, or how does the team think about deciding when to contribute to an ecosystem?
Yeah, so really looking at kind of the size and stage and what they're doing. And so in the case of let's think about verticals, for instance, and perpetuals by TVL have become pretty large. They're pretty prevalent in a few ecosystems. And so as we think about where we want to expand our modeling, where we think they're, from a product perspective, where there's product market fit, where there's potential repeatability, we're really looking at the markets that have gained traction and that have staying power. I think the same can be said for ecosystems as well. And so we evaluate verticals on a case-by-case basis, the same with ecosystems, and then similarly with protocols. Any protocol that we end up working with, before we decide to work with them, we undergo a diligence process internally. We're looking at their code, we're looking at their white papers, we're really making sure that we, one, understand the mechanisms for modeling purposes, but two, that we think that these are kind of resilient at scale and really are doing what they're designed to do. We have turned people down in the past when we kind of look into this and see it's not the case. And so really it's kind of a matrix or combination of a lot of those things. I think, to your point and Stable, I've really appreciated you guys getting involved earlier on when maybe there are DAOs that don't know how to think about frameworks or how to think about standing up governance. I think your guys' experience doing this across a bunch of pretty large protocols and doing it well has contributed to the growth, meaningful growth to a lot of these DAOs via governance. And I think there's a bunch of good live examples of that now.
Yeah, so I want to dive in a little bit more into some of these contributions, because I think there's some notable things that Gauntlet are doing at some of these protocols. Why don't we start off with Compound? You mentioned Aera, I believe it's pronounced, the treasury management platform that you have stewarded. Why don't you give a breakdown of what it is? You kind of already did in the intro, but maybe like what are you actually trying to achieve within the compound community with Aera?
Yeah. So as I said, Aera is non-custodial autonomous treasury management for DAOs. We had been incubating Aera for a couple of years at this point, and really just like taking time to make sure that it was ready for prime time, so to speak. And really that came from just a lot of the work that we were doing with DAOs on the risk side. We just see a few key challenges for DAOs, things like on-chain coordination, misaligned incentives, kind of lack of clear goals from the DAO in general. So really kind of break it down in a few ways, and like starting with on-chain coordination. Operating within a DAO is challenging. There's a lot of stakeholders. Getting alignment on a treasury strategy and like overall DAO growth and goals can be really hard. We've seen a lot of DAOs kind of go back and forth with this over the past couple of years, and oftentimes results in no decision and nothing kind of like changes from there. And that's obviously not the goal of those conversations. I think the second part is kind of misaligned incentives in some cases. And that goes back to different community members having different goals, kind of like the way votes can be skewed one way or the other. And so, general, like, from top to bottom, not necessarily super aligned. And, of course, like DAOs goals, like if they're ill-defined, treasury management decisions and discussions only kind of cascade these problems. And so, those are kind of a lot of the things that led us to wanting to build Aera, kind of along with this like trilemma, essentially, of like, a treasury management solution that's non-custodial, that's fully transparent, and that is autonomous. And we've seen, we haven't seen anything like that fully on-chain just yet, or we hadn't at the time of starting to build Aera. And so really happy to kind of be able to bring that to market. In terms of the compound proposal, so we proposed a pilot to the compound DAO to take $500,000 worth of V2 reserves, notably 0x and BAT, and put those into an Aera vault utilizing a passive rebalancing strategy on ETH volatility targeting. We chose those reserves kind of looking at V2 usage and looking at kind of the V2 risk. And then the other thing that Aera really does is, being that everything is on-chain, there's no sense of like a true TWAP in a sense, because we are actually executing these swaps through DEXs. And so the first thing we do with them is we're taking these lower liquidity assets and we're swapping out of them into USDC and wrap staked ETH. Being that they're lower liquidity, you can't just do this all in like one chunk. And so, one of the things that Aera is designed to do is to automatically sell out of these assets when liquidity conditions allow to maintain price fidelity. And so we're not doing anything at above like 0.5% slippage. We're capping kind of trade amounts on or swap amounts on at certain amounts. And so, it may take us a little bit longer in some cases to swap out of assets, but we're retaining as much value in those as possible. As those swap out, they are going into that passive rebalancing strategy, which is a good, nice passive way for the compound DAO to earn yield on otherwise idle assets. So we're really excited about that. We also work with Moonwell and Threshold and talking to some others there and really looking to onboard some DAOs into pilots probably this and next quarter as we continue to build out and expand the capabilities of Aera. Whereas compounds utilizing an ETH volatility targeting strategy, we have other DAOs that want to do things like grow protocol own liquidity, manage runway and expenses. Maybe there's other types of ways that they feel they could grow their treasury. And so we're there to provide kind of like a risk adjusted way to do it. All while the DAO or whoever owns a treasury has complete control of their funds, can withdraw them at any time. And also kind of interesting within an Aera vault, before we ever have anybody deposit into an Aera vault, we basically define a certain set of actions that the guardian, who's kind of responsible for managing the strategy, can take. So maybe there's only a certain tokens that can be swapped into a vault or swapped out of a vault. Maybe there's only certain protocols that are kind of whitelisted for the funds to go to. So really trying to add that additional peace of mind for these DAOs as they consider different types of treasury management.
Yeah, can you clarify what kind of management or what kind of control the DAO actually has? Is it kind of up to them to create that mechanism, or how are they able to influence the direction or change if needed within these? Yeah.
Any DAO that wants to onboard to Aera, first we want to understand what their objective function is. Why are they thinking about treasury management? Is it runway? Is it just generating passive yield? Is it something else? We'll design the strategy by which to achieve that, present that to them if the DAO is aligned. We build that into an Aera vault, and it's built in a way that it runs autonomously once the funds are deposited. So in terms of kind of control of funds, The DAO can, again, pull funds whenever they want. They can add more funds if they want. Aera nor Gauntlet nor anybody else is able to pull those funds out of that vault or do anything that's kind of outside the predefined strategies that were agreed on with the DAO.
Gotcha. So all you're doing is providing the rails to do so, to deploy these types of treasury management strategies for the DAOs. I know this is something that a lot of other treasury management platforms maybe struggle with in terms of getting buy-in, having the trust from the community to deploy that type of capital. Do you have any takes or any? Have you seen any of that type of behavior within these DAOs?
Yeah, I think we've gotten a really nice response to Aera because of the non-custodial nature of it. I think a lot of the back and forth you see on DAO governance forums when treasury managers are looking to be engaged is like you have to kind of take a leap of faith and say we're going to transfer this to somebody else, and that person's going to have control of our funds for some predetermined amount of time, and we may not even know what they're doing with the funds necessarily because it may not be all on chain. So with Aera, what we've gotten a lot of really nice feedback on is one, that aspect of you're not giving your funds to anybody else, they're still yours. And two, that everything an Aera vault does is on chain. You can see the swaps, you can see the rebalancing, you can see kind of the volatility targeting strategies take place. So you always know where your funds are and what your funds are doing at any given time. And that's not to say that I think other treasury management solutions are bad. I think there is no one right fit for anybody. I think it's pretty smart. Like if you're a portfolio manager or a fund manager, maybe you have a more aggressive treasury strategy. Maybe within that there's like an allocation to a less aggressive strategy. I think where we come into play is we just want to make sure that we are building something that we feel is like very closely tied to the DeFi ethos of being on chain and transparent and giving DAOs control of their money.
Yeah, totally. I also want to touch on Arbitrum. So there's a recent proposal called the Arbitrum Coalition. Perhaps that for those listeners who may not be as familiar with the proposal, could you break down what's in the proposal and what's it aiming to achieve?
Sure. So the Arbitrum Coalition proposal is a joint proposal between Gauntlet, Trail of Bits, and Blockworks Research. Essentially, the impetus from this came from, if anybody's been following the Arbitrum DAO, there is a lot of activity. And there's a lot of really encouraging activity. I think the DAO discussions have been high quality. I think DAO participants are super high quality as well. There are a lot of proposals coming through too. And we got a lot of feedback, and we still see a lot of feedback that there are some proposals that delegates aren't quite sure how to evaluate, or there are a plethora of proposals that maybe they don't have time to evaluate. I think the recent STIP program is an example of that, where you have 50 applications, each of them takes at least an hour to do kind of a good job analyzing. And I know a lot of delegates just don't have that much time. The coalition aims to simplify the process for delegates to evaluate governance proposals, as well as conduct other types of research and analysis that DAO feels would benefit the Arbitrum community and DAO overall. Taking expertise from kind of each of these members. So you have Trail of Bits, who has a very nice audit track record. I think everybody kind of knows who they are and holds them in high regard. You have Blockworks Research, who has been a fantastic delegate in the Arbitrum DAO and elsewhere, has produced a lot of great research as well. And then you have us on kind of the economic and market risk side. So taking all these different angles, taking experience from all these different companies, it really allows the coalition to provide multiple different viewpoints and really simplify a lot of the analysis and ingestion for delegates when they are reading through these, helping kind of translate what this means in terms of contextual terms. So if this passes, here's kind of what this looks like. Here are the considerations you should think about as you vote for this. We're going to take a totally kind of neutral stance. We're not playing favorites. We're not picking anything. We are avoiding kind of conflict of interest on anything that we're doing with our own delegation. Really, it's just to benefit kind of the DAO and the community overall and allow governance to keep moving at the pace it's moving, but do so in a very efficient manner.
Yeah. So some of the pushback I've seen for this proposal is this, and this is something that's happened across other DAOs as well, and something we're going to continue to see, is when a service provider also has delegation, right? There has to be, clear communication from the stakeholder, or an approach that is communicated in terms of how are you going to handle servicing the DAO, but at the same time having the ability to sway or vote on your own proposal, and how do you handle that? And so there's that issue there that we're going to start to see as maybe more and more companies or firms start to want to also go down the service provider route. Do you have any takes there, or how does Gauntlet plan to approach that, distinguishing that conflict that may some people may see there?
Yeah, no, I think it's a good question. I think it's something we're going to see a lot of discussion on, to your point, even more so in the future as more service providers come on board and as DAOs expand. I think one thing that's helpful is, voting records are all on chain and they're all transparent. You can see how people vote. You can see how people communicate their votes. One thing we've been very explicit on with this coalition proposal is avoiding conflict of interest situations. You can look at the live snapshot right now. You can see that Trail of Bits, nor Blockworks Research, nor Gauntlet have voted on it. We will not vote on it. We will not vote on it if it goes to an on-chain vote. We believe in maintaining that kind of distance between us as a delegate and us as a service provider. And I think other examples of that are, we're a service provider to Aave. We try not to kind of like use the Aave that we have to vote within the DAO as if we were kind of like a DAO participant. We are a service provider, and so we're typically only going to kind of vote on risk-related topics or kind of use our delegation to put up proposals that are related to risk. We've outlined a lot of this in like terms of service and other things, but I do think that we can continue to be more vocal about this, because I do think if this is a good example of what you were saying by like leading by example. I think this is a very good way for us to lead by example, like continue to be vocal about this, continue to kind of like structure maybe like a universal framework for all service providers around conflict of interest where they may also be delegates. Other than that, I think the other things we can do are just hold each other accountable. I think Aave is a good example of that. Arbitrum is a good example of that. There are a lot of really good examples of high quality DAO members who, when they see things, they say things, and I encourage that, and I hope that people continue to do that. I do that too as a delegate in some places, and so I think in a world where we're decentralized and we're transparent, we should be holding each other accountable like that in public too.
Yeah, I really agree. And we've also structured ourselves internally in a similar way in regards to, things such as conflict of interest. We have our public kind of like policies, and, it reminds me a bit of like a political program, because I think, we're a little bit more on the delegate side than you guys are, right? But I wanted to kind of like talk about the topic as well, right? Because Matt, we see you guys, but also other service providers who, started as service providers first and then became delegates, right? We've also seen, delegates such as ourselves or, other delegates as well who started as delegates and then became service providers. Why do you think that this intersection is so intertwined, and why was it important for someone like Gauntlet to become a delegate in the protocols where you guys offer your services?
Yeah, I think in the case of, I'll break it down in a couple of different ways. I think in the case of going from delegate to service provider, and why that may happen or why you see that occur, is because as a delegate, you get very intimately familiar with the DAO and the protocol that you're serving. So for you guys or for other delegates, as you're voting on things, as you're reading governance forms, as you're kind of conversing with members of the DAO, you're probably identifying areas of opportunity that can make the DAO better and more efficient. And being that you're as close to it as you are, you probably have very good ideas on how to do that. And so I think that in some cases can be a natural progression. There are some delegates who maybe don't want to get as involved, and that's totally okay as well. So I think there's different levels of comfort there. I forgot the first part of your question.
Why it's important for Gauntlet to be a delegate?
Okay. Yeah. So I guess
the other side of the coin, right? Yeah.
Yeah. I guess to take a step back and zoom out a little bit and kind of look at the history of Gauntlet. So Gauntlet, received a grant from Compound for work back in 2020. This was before Compound became a DAO, and I think at the time, everybody was still pretty down on DAOs after the DAO. People were like, oh, DAOs don't work. We're done with these things. At some point, Compound came to us and said, hey, we're transforming into a DAO. We still value your work and want to work with you, but we need to figure out how this goes. And so we actually kind of became one of the first, quote unquote, B to DAO companies that way, by working with Compound and helping them transition to a DAO and understanding where we fit into that framework and how we can participate as a service provider within that DAO. And so, things like these proposals, things like structuring how it works on the payload side of onboarding a service provider. We were kind of, I think, one of the first ones, if not the first one, to really dive in and do this. I think that experience, and then our general experience kind of working around other protocols at the time, like Uniswap, we had done some work with Maker and others, gave people confidence that we have a unique vantage point that not many have, which is deeply quantitative, deeply experienced, and has done a lot of background research that maybe others haven't quite done yet. And so that allows us to bring a perspective that maybe others don't have, and one that could be valuable for the DAO to hear, and one that could be a valuable voice when it comes to voting. A lot of what we try to do, especially for quantitative-based proposals, is we run internal analyses on these things, and we let the numbers tell us how to vote. We try to vote very non-emotionally. We put up a voting philosophy everywhere we're a delegate. We want people to know how we vote and why we vote the way that we do. And the more we continue to service DAOs, the more we understand on kind of what it means also to be a delegate and how to kind of make DAOs. I don't want to say make DAOs better, because I think DAOs are great, but I think continue to grow and improve DAOs in the operational aspects of it, and the delegation and voting aspects of it too.
Matt, I know, perhaps related to what you just said, I know Gauntlet has a couple proposals live right now. So the coalition, and then there's also the renewal at Aave. And in that renewal, you're basically, requesting the community to approve, for you to continue servicing the DAO. So my question to you is, what would you improve about this process? And the process is kind of, in certain communities, it's a little bit trickier. There's a little bit more back and forth, a little bit more pushback. Do you think this is a net positive? Do you think this is just the way it's going to continue to be? And maybe even, it gets even crazier once we have more people join the space, in terms of like getting people to buy in, people, there's always going to be pushback, criticism, feedback, et cetera. Do you have a take here?
I think it depends on the DAO, and it depends on the maturity of that DAO. In the case of Aave, there are a lot of very high quality DAO participants, a lot of high quality discussion, and Aave as a DAO has been around, is in a more mature stage than a lot of others. They know what they want. They know what's going to help them grow. They also know what they don't want, and they also know what's not going to help them grow. In the case of Aave, I think we're comfortable letting the DAO kind of decide that process. It's up for them to decide, and they've clearly done a good job of kind of growing the protocol and the community. In terms of how I think about this long term or at scale, or if we have a ton of more service providers come in and a ton more protocols, I think we'll organically start to see ways to make it more efficient across the board. Maybe you see some DAOs will let committees that make these decisions, makes it a little bit more efficient, maybe draws it back a little bit closer to that Web 2 fintech experience I was talking about. We'll see how that goes. There are some doing that now. We'll see how that performs against kind of seeing how traditional like the DAO processes perform. One thing I really love about this space is everybody's always willing to push the boundaries and try new things. So I wouldn't be surprised if in a month from now we see a new way of deciding how to onboard service providers. And so, I don't think this is the end state. I think there's probably a lot of room to grow and make things better for both DAOs and service providers. What those are, I think, remains to be seen. But I think, as long as DAO members remain engaged, as long as service providers remain engaged and everybody's collaborating, we'll find those things together.
I want to read a tweet to you and get your take and hear your response to this. This is from Monet Supply. This is, I believe, in relation to the Arbitrum Coalition proposal. He tweeted, quote, "Have we considered the possibility that DAO service contracts can be priced high because DAOs are uniquely mercurial and unreliable counterparties?" And he continues, "If you want better pricing for your DAO, build good relationships with service providers, have a track record of honoring agreements, minimize governance whiplash as much as possible." Do you have a take or a response to that tweet? I thought it was very interesting.
Yeah, I mean, Monet is somebody who's been around DAOs for a while and really understands how a lot of them operate. And so, I think he's probably speaking from experience there. I have seen, I can't necessarily say I've experienced it, but I have seen some DAOs not kind of honor contract with service providers and other kind of like ecosystems and areas. And, it's not, never worth it to go into names or anything. But I kind of see what he's saying is like, service providers do take a little bit of a risk, given that there's not a whole lot of like downside protection if a DAO just says one day, we're not going to pay you, or we're going to like cut off your contract. And so, there's things like duration risk, there's FX risk, and there's other things that service providers have to account for. And so, if you, maybe that gets baked into pricing, maybe they get baked into terms. I think as much as service providers are here to protect and grow DAOs, I think that can also come back the other way. I think DAOs should also think about how they can protect and grow service providers, because it's really going to take kind of both of these areas growing to continue to get DeFi and crypto as big as we all think it can be over time.
Yeah, I think like this is also like a good point, right? Because I think that at least like from my experience also with being present in these DAOs, that there's kind of like this like idea that like, service providers are like coming and like looting the treasury, right? And like they're all like coming and kind of like trying to achieve like as much as possible financially from these DAOs. And I think like this also just comes from the fact that we have seen cases like this in the past. There is definitely some proposals, where when you like review it afterwards, you're like, they paid this much for that, but again, not naming any names. So this is definitely something kind of like this tension, you can almost say, right? Is something that definitely can be like holding service providers back in general. What do you see as kind of like the main obstacles or like the main projections for a company like Gauntlet to really grow into its biggest potential and become, kind of like or like enable itself to service all of these DAOs, which would then, hopefully create like better risk management for DeFi as an entire entity, right?
I think there are a few ways to approach that. I mean, I think one, it's just as much on service providers to work with DAOs to understand their needs, and proposals should reflect that. I'm sure you guys have, and I've seen plenty of proposals where, as you're kind of saying, Gustav, you read them and you're just like, this doesn't make any sense. So we always try to map back anything we do to the needs of the DAO and like how we can better service the DAO. We try to provide very clear kind of milestones or KPIs or ways to measure how successful we are. In some cases, we even put skin in the game. We have an Aave renewal post up right now. We're continuing to offer what we call an insolvency refund, which basically takes a portion of our contract and puts it into a vault and says, if we cause any meaningful insolvencies from our parameter changes, there's some other terms in there that you should read through. We will kind of pay out from our own payment to cover those. I would love to see other people do that as well. I think that would get DAOs comfortable with onboarding more service providers, even if it's a little bit vaguer in terms of scope, just knowing that there is a lot of significant skin in the game there. In terms of how we expand this to more protocols, how we kind of holistically raise market or economic risk management. I think I've seen, a shift from kind of like, individual kind of protocol to protocol basis to now, like we see a lot of ecosystems thinking about risk management more holistically. And so I think there's something to be said for looking at like, different L1s, different L2 side chains. Like how can you create a holistic risk management product that not only benefits like certain protocols, but also the community or kind of like the network at large. So we spend a lot of time thinking about that and thinking of ways we can better do that and expand. Because I agree, I think we have to expand. I think the market needs to expand, and we have to do that with it in order to continue to grow.
Yeah, something you guys are touching on, which is a recurring theme or topic that we talk to guests about, is that DAOs need help understanding their needs. And then service providers can then come in and address those needs, right? So most of the time that's the case for now, because they haven't matured enough. At least only a certain amount of protocols have matured to a point where we can clearly define domains to service. But then there's these other DAOs that are just barely coming to maturity, and they still need that help. Understanding, okay, what are they trying to achieve here? What is the decentralized community trying to do? What are their needs? And then once you spot those needs or those domains, then service providers can come in and help them address that. So we're kind of in this weird, at least for certain protocols, we're in this weird stage where we're trying to help them reach that point. And then also the people that are there early, the stakeholders that are involved, will be like, oh, they'll raise their hand and, hey, I could help you with that. So I don't know, just something that it's an interesting thing that I've noted. I don't know if you have any comments or takes on that, Matt, but yeah, that's definitely something we see.
No, I've seen that a lot as well. I think with, the only kind of caveat I would say there is, there are some DAOs that spin up who there are basic things that DAOs need that, sometimes they don't even really think about or know that they need until somebody kind of tells them. If you're a 4-year-old kid, for instance, you may not know that you need to put shoes on before you go outside, but your parents certainly know that because they've experienced this, they've seen this, they know how this goes. So in terms of experienced service providers like you guys, like us, like others, we can look at a DAO in certain stages and kind of say at least at a high level, here's kind of the checklist of what we think at this stage should kind of be there or be in place. And in the case where it's not there, I think service providers can come in and fill that need and help kind of be more prescriptive to DAOs and kind of helping them understand if you want to go here, here's the other 3 things you need to do first. I think you guys have done a really good job of that. I think we try to do that through our engagements and just by being a delegate as well. And I think the more we can do that, the better DAOs can be overall. And I think we'll encounter, different edge cases and things like that over time where, not everything's going to fit in some perfect circle or perfect box. But, the more we can put some guardrails around that, the more we can have like more holistic frameworks on how to think about this, will allow newer DAOs or even more mature DAOs to make more informed decisions.
So like instead of calling us service providers, it should be Stable Lab and Gauntlet DAO parents. Is that what I hear?
We are kind of the old folks in the room now.
Yeah, crazy, no?
Yeah, I've lost a lot of hair since working in crypto.
So perhaps related, I want to touch on stakeholder relations. So, risk management is this very, deep in the weeds topic that maybe not a lot of delegates quite understand. I'd love to hear more about how Gauntlet maybe approaches, furthering this education, communication aspect to make sure the right people have the right information in front of them to help them, make informed decisions.
I think this is something we continue to try to improve. I don't think there's any sort of perfect state for this, and we just want to constantly be improving how we communicate, how we educate with different types of DAOs and communities. For any engagement that we take on, like an Aave or Compound, et cetera, we are assigning dedicated teams to these engagements that become very intimately familiar with the protocol, the DAO, the inner workings of the mechanisms, et cetera. And so whenever we want to make a change, whenever we want to respond to something risk-related, we try to do so with as much detail and analysis as possible. So if you go look at some of our Aave posts, you'll really see how we break things down and really try to provide trade-offs of making different decisions and what those mean from a market risk lens. We're not here to kind of tell the DAO what it wants to hear. We're here to tell the DAO, from an objective point of view, how things shake out, depending on how certain parameters, how different market conditions, as they occur, could affect the protocol and the different risk levels. I think one thing we can get better at is taking these, even as we break things down, we're still using complex topics. Market risk is complex in general. I think what we can do a better job of is even taking those more complex topics that we're talking about within these posts and breaking them down even further. Maybe doing some sort of educational series for those who are interested and kind of giving baseline fundamentals on how to think about risk management or how to think about market risk. Because I think to your point, there's, not every single person is qualified to think about or look at an analysis related to kind of parameter changes and say, okay, this makes sense, or okay, this doesn't make sense. But we'd like to get as close to that as possible as we can. One, resonates with our mission. Two, again, rising tide lifts all boats here. And three, by doing that, we want to create best practices for other DAOs, for other service providers. We think everybody should have access to this information. This kind of goes back to just being as transparent as possible.
What's your take to some of the skeptics or critics that say that some of this risk management is kind of maybe not pointless, but kind of like just added friction in this process because you have to go through governance. What do you say to those types of comments or pushback?
Sorry, can you clarify the question? Critics of going through governance, or just of like risk service providers in general?
I mean, for example, let's say that instead of paying the likes of Gauntlet and Chaos and the other risk management service providers, we just took the same money and put it into a backstop fund. What would your response be to these kind of criticisms, right?
I think everybody should have a perspective on this. I also think we can just look at kind of past events, past history, data. The numbers don't really lie. You can look at kind of the amount of economic exploits notionally is over $500 million. I don't think at the time of some of those larger exploits happening that even if these DAOs had a backstop fund, it would have covered even a fraction of that in some cases. And so, the response is kind of if let's say you have a TVL of 100 million, are you willing to pay 1 million to protect that 100 million? Or how much are you willing to pay to protect kind of the entirety of your protocol? And I don't think it has to be a how much are you, but I think, if you look at traditional industries, trading firms have risk desks. Banks have, compliance departments, risk departments, et cetera. There's a lot of money at stake in DeFi, and there needs to be these objective third parties like us and others who come in and take the stance that, here's how we view these different parameters in different market scenarios, and here's kind of the risk tolerance that we'd be willing to take given all the available information. I think it's still going to be somewhat of an uphill battle for some DAOs and some people. I think not everybody comes from these traditional industries. So not everybody kind of like sees what I may have seen or what others may have seen in past careers and how things are structured. And that is totally okay. I think then it's on us to better educate and better help them understand the value that we provide. Because one thing too is that risk management is, you don't really think about your risk manager doing a bad job unless something bad happens. But if you get done at the end of the year and nothing bad has happened from a market risk lens, if you're not like super in tune with what risk management is, you might just say, oh, the risk manager didn't do anything. But you don't really see in the background how much analysis is being done on an ongoing basis to make sure parameters are set in a way to where there is nothing bad that happens. Or on the conversely, how much capital efficiency is driven through the protocol by changing parameters in a way that make it more attractive to bring borrowers onto the platform. So we try to quantify our impact in a bunch of different ways. But I think at the end of the day, like it really is up to market participants, DAO participants, et cetera, to like ask questions too. Like ask us hard questions. We are happy to answer those. You go to one of these governance forums, you'll see that we've created a lot of posts. What you don't see unless you click into them is how many questions we're answering and a lot of the back and forth that we're also doing with different community members that just have questions on different aspects. We welcome those questions and we really enjoy responding to those. And so I would say, if you ever see one of our posts in your DAO or community and you see something, and even if you don't really want to ask about it, you want to learn more, just do it anyway. You might learn something, and as a result, I keep going back to this, but a rising tide lifts all boats, and I truly believe that, especially in an industry that's still as kind of small and tight knit as DeFi is.
Love it. Thank you, Matt. I do want to call out the time. We'll let you go. I do just have one final question. Any final thoughts or comments as we wrap? Anything you want to plug, or what can people look forward to from Gauntlet in the coming year? Yeah,
I guess in terms of what I'll plug is we announced that we were bringing Aera out of kind of private alpha a week or so ago. We are talking to a lot of DAOs about helping solve some of their treasury management needs and better understand those. So, would love to have a chat with any DAOs thinking about treasury management. On the Gauntlet side, we are continuing to expand verticals. We're continuing to expand ecosystems. So if you want to just learn more about market risk, you want to learn more about economic risk, there doesn't have to be an expectation of anything after. I'm always willing to have those conversations. You can find me on Twitter, Matt Dobel. You can find Gauntlet at Gauntlet_XYZ. And you can always just reach out to me directly on Telegram, which is the same thing, Matt Dobel. But I really appreciate you guys having me on. This has been a lot of fun. I'm a really big fan of Stable Lab in general. I like all the work that you guys do, and look forward to continuing to collaborate with you guys in different DAOs and different ways.
Really appreciate that, Matt, and thank you so much for coming on. You guys have always been one of the main examples set for the rest of the industry in the DAO space. So yeah. Really love everything that you guys are doing, and really excited as well to see, because I think like one of the topics, treasury management, is something that we see in a lot of the protocols we work with being done in a very inefficient way, where you can like vote on like where to put your funds, and yeah, really excited to kind of like see how your product here takes off.
Thank you for joining us, Matt.
Thanks a lot. Thanks, Gustav.
Thank you, Gustav. We'll see you on the next episode of Stable Pod.